Good morning, folks, and welcome to today's video. So I have one pair on watch today, and that is Pound Aussie. The other pairs look like they need more development. A lot of the pairs this week have just been messing around, so it's been difficult for me to get involved once again with the entries that I typically look for. But again, patience is the name of the game where trading is concerned. Price will often do this for sometimes long periods of time, and you just have to sit on your hands, and that is what trading is largely about. People think that trading is about trading. Well, of course it is to some extent, but trading is the majority of time about not trading. Okay, it's about staying out of trades rather than being gun-ho and trying to get in as many as you can. So that is what I intend to do and what I have done for quite a while. So I'm just going to show you Euro CAD ever so quickly, which is one of the pairs that I was looking at. Yesterday. So on the lower time frames, I'm not going to go through the whole thing, but on the lower time frames, you can see. Remember me saying, I said to you that I thought that I had two. If you look at my forecasts, okay, so I have my forecasts on the chart. Let's just get that on the chart quickly. So these were my forecasts. Let's just move these over. So what I was looking for is I was looking for a break below. This might help one or two of you that have been watching my videos regularly. I said that I was looking for a break below and a break back in. That was my preferred option. And then I was looking for the correction afterwards. And then I was looking to get long on the break of the correction or within it. And my second preferred option was just a push up from where we were. So a push up from here, followed by a tight flag. And then I would be looking to get long on the break of that or within it. Okay. Now, the reason these were color coded as such, so the traffic light system, green, amber, and if I had a third option, that one would be red. The reason I've color coded these is because, typically speaking, as I've said before, when a higher time frame liquidity point, and this might be very useful to some of you that have not seen this method of trading before, when a liquidity point such as this is visible on the higher time frames, particularly when it's visible on the weekly chart as well, okay, it is more likely that if we are going to push to the upside, so for the longer term move to the upside to occur, even when we have a reversal structure present, it is more likely that we break below before that move to the upside occurs, okay, where we catch people the wrong side of the market. People believe what was previously support becomes resistance once it's broken below, so people start selling. And as I've touched on previously, brokers put out messages saying Euro CAD at whatever the date is, 3-year low, 2-year low, whatever it is, and they do that to encourage FOMO, to encourage the selling, and then the bigger players step in because they see this as a bargain price. If you've ever watched a Warren Buffett interview, you may have heard him say that he likes it when his stocks and shares go down in value because he just buys more. Okay, he says that in one of his interviews. So a lot of people wouldn't understand that. Why would you buy more if something keeps going down? Well, in business, that's a discounted price. Okay, if you've got if you're looking at a house on a street, you're looking to buy a certain house, but you're a bit concerned that the house prices are too expensive. If suddenly house prices drop and you can get that house for, let's say, £100,000 or dollars instead of, I don't know where you get a house for that price in this day and age, but 100,000 instead of 150,000. You wouldn't expect everybody on that street to just start going and selling their houses. That is a discounted price, okay? Unless there's been a fundamental change, and the fundamental change may be something like, it'll be a break below followed by a flag, because then the highs within the flag would represent a good area of value for a sell, okay? So something like this. I'm just trying to explain the mechanics of the market. So if we saw something like this, then something has changed because now this price represents a high area of value for a sell, okay? So that's how we trade. So when we pushed up from here, one of the reasons there was a little flag. I just thought this would be useful to one or two of you. There was a little flag there, but we moved up quite correctively. And not only that, I said to you, we had this flag with 3 drives. So we have this 1, 2, 3, and then of course price moves, which is typically what happens. But the reason I didn't take this is because Okay, we've just frozen up ever so slightly. The reason that I didn't take this, if the trading view unfreezes itself, the reason I didn't take this is because this could have quite easily, because of the impulsive momentum down, this could have quite easily turned into this to push lower. Okay, so I could have been tagged into this trade here, tagged out, and then priced to something like this, and then pushes lower because of how much impulsive momentum there was, and how you know how this flag here after we had the push up. I wanted to see more of a push up to negate what I've just shown you. Okay, so it's no surprise to me that after we pushed up, that we pushed down aggressively because price never broke the low. Okay, and to me, this aggressive pushback down is likely the orders that are still below here dragging price back down. So I'm just going to let this develop now, and so that's why I didn't place a trade on that. But I just thought that might be a good lesson for you. But anyway, a lot of the pairs look a little bit like this. They need a bit more development, and I'm sure that will come as it always does. So what am I looking at today? I'm looking at today pound Aussie. Okay, so pound Aussie on the higher time frames. We have it. You may have to zoom in a little bit to see this, but the picture as I see it. Okay, and I have broken this down a few times, but for those of you that are new, we have a sharp move. We can see this on the daily chart. We have a sharp move up and a sharp move down. The sharpness of a liquidity point is often a good indication of how much liquidity is in that area, okay? Versus if we just sort of trickle up to an area, okay? That implies that a lot of orders were placed in this area very quickly, and then they were filled, and then it sold off very aggressively. Look at the sell off last time around for a pair like pound Aussie to sell off like this. Okay, that's a very, very impulsive move. That tells me that there was potentially a lot of liquidity in that area. We then wick to this area, but we don't break above it. Okay, now we know that this is potentially an area which the retail traders will see as support if it's broken above, okay? Because it's visible, as I've said before, on the higher time frames. And the brokers will likely put out their messages if we break above here, saying pound Aussie at 3.5 year high, whatever it is. So let's test the theory, shall we? So we do break above there. We break above. Apparently, this is now support, and price comes crashing to the downside. So we see people being caught the wrong side of the market time and time again. And one of the clues for me that this was likely to happen, just another positive confidence factor, was the fact that we had a near miss here to this low here. I've just cut through this wick just because we have structure here, and this is of more significance. Okay, so when we have a near miss, price gets close to a low, but it doesn't quite tag it. Then these higher time frame moves, which we anticipate, are more likely to find their way down to these areas versus if this had actually tagged this area. Okay, especially when the low in question happens to be the start of a piece of structure. Okay, so it's an area of significance, a good area where where people would likely be getting out of their positions. When a low is the start of a piece of structure, it is more like it's of more significance, and therefore price is more likely to find its way down there to that area. Okay, so now I ask myself, am I well positioned for a move to the downside? Well, yes, as I see it, we have this 1, 2, we break above, come crashing back down. There's no reason for price to move to the upside. And even if we were to stall or form something more complex from this low, then from where price is at the moment, there's more than enough profit potential down even to this area, given that we are on the daily chart. So tick in the box, we're well positioned for a move to the downside. The next thing I ask myself is, what is the sequence like? So the sequence from this move down here, what is that like? So I'm going to drill down to the 1 hour chart, and I'm just going to touch on something on the 4 hour chart in a minute. I'm going to zoom back out. So we have an impulse down followed by a correction which is disproportionately wide to the move down which has preceded it. And if you don't know why it's disproportionately wide, once you've been trading for long enough, these things, you start to see these things. So this is not typical if we're going to push lower. However, sometimes it happens. Some things happened. Nothing happens all of the time, and nothing happens none of the time in trading. So that's what I always tell myself to help me remain probabilistic, which is vital in trading. But after that, we move in a fairly nice sequence. We move in a fairly typical sequence. And if the sequences are typical, then obviously the next correction, given that these are just a series of impulse correction continuations, if I'm looking to get short on one of them, then I want to see a typical sequence ideally, because then the correction which I'm looking to trade within is likely to be more reliable as well, okay, because price is always repeating itself. So we have the impulse down correction, impulse down, there's a smaller one in here, into a larger one. Then we get this big, larger correction. Not really that typical, given where we are in structure, to see a correction this wide relative to this move down. However, this is pound Aussie, and sometimes that happens. Then we go into a more reliable sequence again, a reliable sequence of corrections. So I'm satisfied that this is a reliable sequence. Okay, we have a bit of a sharp move up here, which is a little bit more slightly erratic price action, but I'm not too worried about that now, because we are trading, we've broken below that, and we've formed continuation, we've formed a correction below this structure. Not a 1, 2, 3, not a reversal structure or anything like that. We have formed a 1, 2, and we have this sharp move up, sharp move down. What did I just say a moment ago? That's likely where the liquidity is, okay? And so then we have this 1, 2, 3 drives. So we see this a lot, these 3 drives. First move up, second move up, this near miss to here. Then we tap into the area, and then we see the aggressive move up to this area, albeit a sharp pullback at the same time. But I actually quite like this sharp pullback, because once again, it's left us with a near miss to this low, okay? So I'm just spending a little more time breaking this down, because I only actually have one pair on watch today, so I can give you more of my thought process versus when I have a lot more pairs on watch. Another thing we know is if we just drill out to the 4-hour chart, we also have a bullish 4-hour high test, okay? So when we see these bullish candles, it's a bullish high test, such as this. So when the wick above a candle is green, which obviously only happens when the body of the candle is green, these are more likely to be filled before price moves to the downside, as I've said in previous videos, okay? So when I see a bullish high test, I'm thinking, yeah, I can see this. Makes it more likely that this is going to be filled. This is what we call an expanding pattern, or it would be if what I'm looking for shapes up, because we would have equal highs and lows which slope to the downside. So this ticks the box of being an expanding pattern. However, we don't really, if this was to shape up by the end of the day, we don't really have any structure leading up to this area of value, okay? So what I'm going to be looking for, with all that being said, is the following. I'm just going to move this over, because this was done last night. Move that over slightly. There we go. Stick this guy back in his box. There we go. So what I'm going to be looking for today, because there's kind of no structure to this move leading up, leading up to this area of value, what I'm going to be looking for is a tap into this area. Ideally, a break above. Okay, ideally a break above, and then a break back in, followed by a correction, and then we would have this impulse correction potential continuation. So this impulse correction continuation. Within this, we have a impulse correction continuation, and then we even have the middle section, which is an impulse correction continuation. So the patterns we look for are fractal, okay? So if we were to push up from here, push down, this is very likely a completed structure, and then any corrections thereafter, I'll be looking to get short either on the break or within. When I say within, what I do is basically this: if it was within the flag, I would be looking for 2 bottoms and the first top, and I would be looking for price to come up and tag the second top, right? And then I'll be looking to get short with either a retrace candle here. I would filter this on the 15-minute chart. Sometimes I look at the structure on the 5-minute chart. I'm not actually trading on the 5-minute chart. You can do that, but I'm actually looking at the structure sometimes on the 5-minute chart. And then I'll be looking to get short here within the with a rejection candle, a retrace, or a high test candle from this area. And then what I do is I set an order on the break of the flag before I do that, if we get the second bottom, just in case price just plummets to the downside, which it can do. So if we have the two bottoms, I set an order on the break while simultaneously looking for this risk entry, looking for the price to tag this top and then reject. And if we get the rejection, what I then do is place a market order, so at the current market price, and then I cancel the original order. Okay, so that's how you can deal with these entries and not miss the reduced risk entry, the one on the break, while the other one is shaping up, because sometimes that can happen. So hopefully that makes sense, folks. I hope you take some value from this. Hopefully I will get another trade at some point. It's been a while now, but I don't care. I'm very, very patient. That is one of my biggest things. If the entries don't shape up, then they don't shape up. I don't know if that alert was triggered there. I didn't see an alert go off, but that's what I'm going to be looking for today, folks. And of course, I will be able to manage that trade down to these lows for something in the region of 3 to 4%, depending on how big the flag that forms actually is. But that is my lot, and I will see you again in tomorrow's video, providing I have a pair or pairs on watch. And of course, if I place a trade, I will break that down for you as well. Thanks for watching. Have a great day, and I will speak to you again soon.